So from then, US dollar became gold, and every decade they caused a bubble to happen in some market or the other. Global economy has lived beyond its mean. I've been, I think, talking for 10 years that there will be a currency realignment in the world. The environment today is clearly inflationary. When there's inflation, the price of goods go up. It has been inflationary. We have been stupid that we've allowed rupee to keep slipping, and the dollar strengthens after they are printing money and our currency is going down. You buy a cup of coffee in US, a $2 Starbucks coffee is now $8.
This is the conversation that we have been waiting for. He, of course, is the director at Enam Holdings Private Limited. He began his journey as CEO of Enam Securities, which later merged with Axis Bank to form Axis Capital. Like I was saying, my first question is going to be a little bit filmy. We've seen highs and lows starting September 2024. There are 2 points of view. There is one pool of experts who say, "Ye kya hua? Ye kaise hua? Kyun hua?" Right? And then there is another side which says, "Ye to hona hi tha," right? So I think I want to understand first that which song is appealing to you more, or is there a third one?
I'm in the camp of ye to hona hi tha.
Aha,
Uh,
okay.
if you want, I'll give you a little long answer, which will give a
Please.
framework to
Yeah.
think about it. That post the Second World War, when the world made a new architecture, the US took control of the world and they created a world where they set up rules by which the world operated. So, how you did trade, how you did immigration, how you remitted money from place A to place B was all set by them. And then by the time you came to the 70s, you realized that this system on currency front is not working because they used to be pegged to the gold standard. And that was found to be restrictive because people were consuming more than they could afford. And therefore, there was a debt bubble. So they depegged from gold standard and went that the peg will be to US dollar. So from then, US dollar became gold. And every decade, they caused a bubble to happen in some market or the other. Some people are very young here, some maybe a little more elderly will remember. So in the 70s, you had the bull market in the US Nifty 50. So Polaroid and Xerox and Disney and so on. That bull market died, and the next decade went to hard assets, where the peak was made in oil, gold, silver. Then that bull market died. The next decade, it went to the then emerging markets, which was then Japan and Taiwan. And those markets went up 10 to 12 times in that decade. As that bull market died, and we came at the tail end of that in 1990, 1991, when those markets were dying, Harshal Mehta was doing the Indian scam. But by then, the bull market had again shifted. And by 90s, you got the top of the technology sector in Nasdaq. Then that bull market dies, and in 2000 to 2010, you got the back to the emerging market, the so-called BRICS, Brazil, Russia, India, China, and you got the whole bull story there. And as expected, that bull market died, and you went 2010 to 2020, went back to technology in the US. And then COVID hit. Normally, you would have expected the whole decade to come back to emerging markets and hard assets. But because they printed unprecedented amount of money, the bull market continued in US, and you created this, what I call the AI bubble and so on, where Magnificent Seven have taken that market and just held it, whereas the rest of the 493 stocks in the US haven't performed. And US became 70% of the world. The other thing which happened in this period of so much money printing is US numbers have started looking terrible, where the current account deficit, the fiscal deficit looks even worse than India at its worst time. So when I say ye to hona hi tha, any rational government would have come and I said I need to fix this current account. The measures they are taking are through tariff to either drop domestic demand or make the producers bear part of the pain. On the fiscal side, what they're doing with Elon Musk and Doge is to cut government spending and get the fisc under control. And the third thing which they're doing is we can't keep financing the world, paying for the war in Ukraine, war in Israel, getting immigration inside. So what they are trying to do is inevitable. The way they are doing it is absolutely absurd. So that's where the uncertainty now arises from.
Actually already given us a great summary of how global markets and with that the Indian markets linked to that have evolved since the First World War. But you did refer to the tariffs, and that is on everybody's mind right now, right? There was a view that Indian markets are resilient, and some of the corrections we are seeing, this is factored in. Do you think that is changing? Do you think we will see deeper cuts in the Indian markets because of what's happening on
So
the tariff
sadly,
front?
yes. Short answer is yes. Uh, the Indian market from last September sold off on the back of high valuations, and by then China had come back. And like I said, the smart money was already moving to emerging markets and hard assets. So you saw the rise of China, you saw the rise of gold, silver, other precious metals, and so on. Is already happening. There's a bull market which has started there, and these developments are only going to strengthen that. We came off an extremely high valuation on mid and small caps in particular. Large caps still looked okay, and like we've spoken earlier as well that the financials looked okay, and you had reasonable valuation. But like you get an excess on the way up, in a period like this, you can get an excess on the way down as well, because remember, foreigners still own 15% of the market, and it's not a mainline market. I mean, for us, 4 trillion market cap is a large number, but the world is at $110 trillion market cap, so we are like 3.5% of the world. In that, if they own 15% of India, it's like for someone in Bombay selling his stock in Sri Lanka and Bangladesh. It doesn't change his overall portfolio in his home market. So there is a possibility, and I don't know how people will behave. And FIs are not just one group; they are a discrete bunch of people as well. But I don't think you should rule out that FI selling can continue, not for Indian reasons, because India has been doing the right things in the last few months economically, both from RBI as well as from government. But the way the flows are in the world, we could be still in a patch of bother, because he's created a lot of uncertainty, and it's a resetting of the rules of the game entirely.
Yes.
So in that period, you don't really want to make long-term commitments. Your risk appetite goes down. You come closer to home base. If you think as an industrialist also today, even though I see this tariff happening and India's tariffs are better than Bangladesh and China and Vietnam, am I likely to make a bet to put a factory today, knowing that Trump will be gone in 4 years? And same way, if an investor, it's a pension fund or a university endowment, how do they take a bet for 4 years, 5 years, that we don't know how the lay of the land will be? So in a period of uncertainty, you typically get what you call higher risk premiums, which means lower P multiples. I mean, short answer is
Okay. So, again, so many points that I could take off on, but what does this really mean for the global economy and direct impact on the Indian investor, many of whom are joining us today?
so. And the pound stands at whatever 100, 110. There's no way on earth it can stay there. Current account deficit, balance of payments, fiscal deficit, big mess. So in this decade, you may see pound at 50 to the rupee. Now, are we ready for something like that? So I said those kinds of paradigm shifts, and you look, boggled when I say it, but you go back across decades, it's happened to countries. Those who lived through, say, the 1998 Asian crisis, currency stumbled and went down by 50%. And this is what Trump is also trying to do. He wants a realignment of currency with China as well. Because China is sitting on $1 trillion surplus on trade. How can the Chinese yuan be pegged to the dollar? Pretty much. Since 2006, the yuan has stayed pegged to the dollar, and Indian rupee has collapsed, and still our exports haven't gone up. So it's not to do with our currency or our competitiveness. We just don't have the product or the quality which the world wants. So a lot of changes are going to come, is all I'm saying.
So, of course, Trump has also
Yeah.
spoken about and against the BRICS nations developing their own currency, which was on the cards. But is the US heading for a recession?
They're planning for it. He said that in his interview as well, that there is a transition period. And if you have consumed in excess of what your income levels are, there's a stunning statistic that 65% of Americans live on a paycheck week to week. 60% of Americans receive some form of check from the government. It outwardly looks like a rich country, but internally they have had no change in real income since the 1980s. 12% of Americans own 90% of the stock market. That is the measure of wealth. But the rest of America is not in good shape. Like a lot of people here, you would have had relatives. You remember when they would visit us in the 80s and 90s? You're too young for that, but we would look at as if some alien has come from outer space and they are so rich and we are so poor. And now when they visit us, it looks exactly the opposite. They are seeing you driving around in nice cars, nice homes. You have staff over there, and they are like, "हम तो कपड़े धोते हैं, हम गाड़ी
And
साफ
they
करते हैं." Like,
envy
what are
our
we doing?
quick commerce as
So
well. Yeah.
it's a transition, And I made the point about UK to say this mirrors the rest of the world. I had friends I went to college with who were Japanese. There's someone who's head of a very major bank, and he commutes to work in the context of going Nariman Point to Goregaon in Japan. Their standard of living in Japan has stagnated for 35 years. Debt levels are very high, but the currencies haven't reflected that as yet because the rules was set by the G7. And what China, Russia, Saudi, and actually even India, which without seeing, were trying to do was to get this realignment. We can't give a currency license to China. Otherwise, the BRICS currency was a reality. But what China has already done is created a substitute for SWIFT when you do your interbank transfers. They've already signed up the whole of ASEAN. Russia and Saudi and the UAE are all on board. So if US switches off today, there's trillions of dollars of money flowing through the Chinese system, and they work faster. You can do a money remittance using the Chinese system in basically seconds, whereas my SWIFT transfer through my bank takes 3 days. So this architecture is being changed, and whether they realize or not, America is playing into the hands of China now. And everything is made in China. So if they switch off and they put tariffs, even if they want to put a factory, it's going to take 3-4 years for that factory to come up in US. In the meantime, what do they do?
Yes.
So it's a period of great change, and I don't think we should approach investing as if it is the same as the last 30 years. It's not, because the US is trying to change. So we can't assume that everything will be the way it was in the last 30-35 years.
So we are also seeing the China plus one, right? Where,
So, I mean, China plus one in theory was there for the last 10 years.
but now more
And it
so
bypassed us and it went to Vietnam. Bangladesh
Bangladesh.
exports more garments and textiles than India.
Missed opportunity, you would say?
Miss absolutely, because of our internal problems, that we don't have the last mile connectivity to the port. The labor laws are not conducive. The way your factory inspection happens, like the average Indian industrialist deserves a Padma Shri for what he deals with. It's really a hostile environment to operate in. Uh, and say in garment factory you have 3 shifts in Bangladesh. Here you're not allowed.
Yeah.
So there are things like that which we are causing self goals. And with this coming of AI and robotics and all in the next 10 years, I really wonder how we lift people up. So we'll see. We'll talk about it.
Yeah, I do want to talk about the role of AI in the future, but I think one question on everybody's mind here is that with the current tariff scenario, so much volatility, what should an existing portfolio be going through? What are the changes one should be making?
So number one, in period of uncertainty, when you say risk premium goes up, it means multiples should be lower. So if you're sitting on these 50, 60p stocks, I think stop dreaming. Just you made your money, take it, and once sit on the side. There's no harm in sitting on cash. I've done it thrice at least in my career. Just before the Harshad Mehta scam, we were 100% out of the market. 2001, when Infosys gave their profit warning, you know this is going to tumble, it's going to take the market. A bull market starts always somewhere else. I'll cover that also. And then 2007, in this madness of subprime and Reliance Power IPO, again completely out of the market. But every bull market gives you a rise in some other asset, which is what the example I gave you from the 70s,
Yeah.
that one thing died and something else comes up. The odds are this bull market this time will be in hard assets and emerging markets. And emerging markets centered around the world, which unfortunately China has created, where they are impregnated inside Europe, they are inside ASEAN, they are inside Africa. Unfortunately, we are not as friendly. But you see the geopolitical change which has already happened with Xi Jinping saying that elephant and dragon should dance together. Because he needs a new market and he needs a new source also from which maybe he can export out. So if these games are played smartly, America, end of the day, it is 25% of the market of the world, but it is only 25% of the world. So it's not the end of the world if they start acting funny, and they've alienated everybody. So, A, don't be scared to create cash. B, think differently from what got you these, returns in the last 4 years. The returns in the next 4, 5 will be from somewhere else entirely. And my bet would be it will be a lot of hard assets, because it's hard to put up factories, it's hard to get material out from the ground. And with US causing this kind of inflation due to tariffs, and you get say a 8% fixed deposit return, 100 divided by 8 gives you 12.5. That's your base P multiple. But now there's no growth. So if someone can give you 20 rupees for that 100, what is the multiple you would pay? It can't be the same as a 8% return. So you'll start paying a higher P multiple for it. And that's really the underlying basis. So when you're paying 50, 60, 70 times for so many companies, you're playing with fire. It's like you bought an apartment and then you're renting it out at 2%, thinking that the apartment price is going to go up. It's not going to go up. I gave this example last year, I think, in around Diwali time. The most popular stock last year, for example, was Zomato. A great company, doing great work, everything great. But I gave the example in 2001, Infosys, which was then the greatest company and still a great company, had a market cap already at that time, I think, of $45 billion. And 25 years have passed and it is now at $95 billion. So it's become double, but over 25 years. The index goes up typically at this 15%, you'll go double in 5 years, so 4 times in 10 years. So in 20 years, you should have been 16 times as opposed to 2 times. And this is, of course, in dollar terms. So because rupee fell, you may feel I did a little better and worse. So using the same math for Zomato, which was then 300 rupees, I say if you want to make even 4 times on Zomato, it has to become 120 billion market cap. And on that, at that time, it will be a fairly mature company like Infosys then was a 50p and now it's a 20p. Let's say we give benefit of the doubt and we give a 30p to Zomato 10 years later even, which is generous. So you would have taken a 120 billion potential market cap for what you want to just meet the index. Divide 120 by 30 and you'll get a $4 billion PAT. And for context, today TCS PAT is $6 billion. So it's not that that number is going to come. So you're playing with fire. It's a great company. Everything is fine, but you're paying a wrong price.
But valuations are tricky.
The environment today is clearly inflationary. When there's inflation, the price of goods go up. It has been inflationary. We have been stupid that we've allowed rupee to keep slipping and the dollar strengthens after they are printing money and our currency is going down. You buy a cup of coffee in US at $2, Starbucks coffee is now $8. That's the level of inflation in US. But the rupee has gone from 40 to 90. That means for us, the example I use here is we used to sell motorcycles for what, 40,000 rupees in 2006. And now if you get it for 1 lakh, you're thinking it's a cheap bike. And your purchasing power is finished. That's why we say, Arey, but India has no market. India is not buying enough motorbikes. They're not buying enough cars. Well, we finished our market. And then we put high taxes on them. So we've shrunken it. So if these paradigms change, then the odds will change. So in an inflationary environment, you want to buy assets and products whose prices can go up and it doesn't give you a demand shock. That's how typically Buffett made his money in the pre-80s era. He was buying brands because they could do price increases and sell it.
My final question to you, sir, would be if you had to pass on just one piece of market advice to your son, to your protege, what would that be?
Actually, the same. Well, first is you be a good person. Good things happen to good people, and be humble, and share what you have. Because we've come to the world, I really believe, like you've come as a wire through which some electricity passes, and you have some special skill which Vinobaji calls your swadharma. So, if Sachin had played chess, he would have been lousy. If I had played cricket, I would have been lousy. So you come for something which you're good at, then do that to the best of your ability and then share. Actually, that's the essence. You find that early in life, you're really blessed and you're really lucky. Like Michael Gladwell, he called it that 10,000 hours of practice will make you better at what you're good at. So a lot of people just rely on natural talent and then like a bull market will make you feel there's no one smarter than me. But this whole study of market cycles, even astrologers I talk to, like Sade Sati, you can be the smartest guy, and if your Sade Sati is opposite, you'll be making losses. So it humbles you. There is a bigger universe out there, and we are a tiny fraction. So just keep perspective in life and be large-hearted.
That's such a beautiful thought. That's a beautiful thought.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Please read the risk disclosure documents carefully before investing in equity shares, derivatives, mutual fund, and or other instruments traded on the stock exchanges.